Hey guys, I just wanted to make a video. I had a individual who wanted me to clarify a few things, and while I'm here I just want to show you what I'm doing. And this is pretty much the final thing I'm doing. I will go through it later and show you how to set up the indicators on the site. But basically, if you zoom in, I'll post a picture and you can see the indicators I have on TradingView, and you just go on TradingView and you get those indicators. And actually that will be another video, most likely tomorrow, on how to get those indicators. As a matter of fact, absolutely by tomorrow. But let's get into it, what I'm doing here. So there are two concepts here, okay? Two main concepts while you're trading during the day. Okay, concept one is you are trading XLF during the day, okay? So you're getting in between arrows, but you're not getting in when the line's flat. See this line right here? Okay. So for example, and you're trading between arrows, but you're not, when this line, see this trailer line? When it's flat, you don't get in, okay? Also, when it's flat, you'll notice that, it's kind of outside the DMI line. You want one of these two lines, see this big purple control line? If one of these at least is inside of it, then you're good. But once it both goes outside this control purple line, you don't want to be really trading too much, especially when this line is flat. So I typically, if you just want a real good rule of thumb, don't trade when the line's flat right here, only when the ribbon starts to move up or move down, right here you get in and stuff. So anyway, this is what I do. I day trade the XLF. And the options I use for day trading XLF, so what you want to do is when you want to start day trading XLF, here's a good time to get in. Okay. Now remember that video where I showed you the control line when it's under 20? Okay. Right here. Here's the 20 line. When this purple control line goes under 20 and you see a setup like this where it starts to open up like the night before close, that's a good time to get in. You don't want to get in when the control line is already on the way down the hill. You want to get it when the control line dips under 20. That's a good time to begin day trading it. Okay, and right here, the arrow's green, and so that's when you want to jump in right over here, because you don't want to do it when it's flat or when it's an opposite color that the arrow already says it is. So you're trading between arrows. So this the arrow and this arrow. So you start here. All right. So you start here. And you look, and it's starting to go below 20, but then this line's flat, so you don't do anything. And it's red in a green arrow zone, so you don't touch it, because the arrow, you're trading between arrows, you don't want it when it's red up here. So all of a sudden the ribbon starts to go up, it turns green here, you're inside a green arrow zone, so you start. Okay, and that's how you do it. You just, now even though it's coming down the other side, the red arrow, you wait till it turns red, then you jump in, then you're holding all the way down, and it's inside the DMV zone. So what options do you want to use? Okay, let's take a look. When you're trading XLF, okay, you don't want the current week that you're in. You always want the one after, okay? Because the reason for that is it's already May 9th, okay? Erosion's going to start becoming a factor, and as you're holding the option, it'll start to slip in price. So when I'm day trading the XLF, I always want the week after. So in here, it wouldn't be the 15th, okay? It'd be the 22nd. So I click that, and I wait for that to click over. All right, now it's reading the calls from the 22nd. So you go down and you want to trade at the money, okay? So you want this one or this one, preferably right inside the money because it's still cheap, 85 cents. You want the one right inside the money, or if you're doing a put, again, you want the one, where the color is right inside the money, or the one right outside the money. Okay, and that's where you want to hang out. That's where the contract you want to buy. And how long do you generally hold it for? Let's see. So as you're going here, you can see this control line right here? All right, that control ribbon I told you about. Usually when it peaks out to here, that's when you sell. Okay? When it comes to this side of the green line, the ribbon, that's when you buy. Okay, so you can sort of see that, like buy, and then sell when it starts getting outside here, and then buy, and it's just the reverse with the red line here. So you want to buy you want to buy when it's above the line, like right around here, and you want to sell when it gets below the line, okay? And then wait for it to, then stay out and wait for it to come on this side. Then you buy, and then poof, and then it comes down, and then you sell, and you stay out when it's open. Well, you would have gotten in here, but then you would have gotten a new arrow. Now again, when you get a new arrow, just like my last video where I showed you about the 15-minute CM slingshot, when you get a new arrow and you're way far away from the main line, like up here, I tend to sit out. You know what I mean? Like right here, when this changed over, the candles are too far away from the line. I'd probably sit out till the candles started coming back more towards it, and then I would have gotten in. So, you know, I mean, you're going to figure this out as you're trading it, and it's going to take a little bit of doing to figure this out. So right here, you know, when it changes over, so here's the arrow, it changes over to red, but look, the candles are away from the main line. I would have waited till they came back up to it, and then I would have started. You know, then you would have done pretty good. So again, like over here, you have a green arrow, right? And then you have this happening, and then all of a sudden the green light starts when you want to get in. The ribbon isn't going flat line, it's where you want it, but it jumped too far up. So you want to wait till it starts coming towards the green line, and then, you know, if you'd gotten in here, you would have been all right. But if you'd waited till right here and then started, you know, trading it and holding on to it, and then it would have jumped, and then you would have done okay here. So if there's a big jump now, like it was by the red line here, so it would have been good. You would have taken that profit, all right, because you're already in by the line. But again, when you get a new color and it jumps way far away from the line, it's better to wait. And even if you miss the whole cycle, it's better than that, because you wanted this profit between here and here, and you already didn't get it, and it's already pushed up. So here, that's kind of not the rule. This is kind of an exception here, but you know what I'm saying. When it changes, you want to be more near the line, because you want that space for your profit and not like you missed it. So here's a good example. So you get the red arrow, and see the candles are by the line. That's excellent. That's a good time to get in. You don't want it to already be like this when you have an entry, because you already missed that pressure, that profit there. You want it close to the line. All right, so now I'm going to bring it back over here. So day trading is part of it, but what you have to do is check every night, and you have to check the QQQ to see, all right, you have to check before 15 to 20 minutes before each close. You have to switch your charts over to QQQ. And you have to see if there's going to be a jump overnight. So let me look at QQQ on the 30-minute or the 15-minute here. The last time there was a jump overnight was like on the 5th of April. So right here, you're going to have half hour before close, you're going to have two charts up. One the QQQ 15-minute and one the QQQ 5-minute. Okay, they both have to say that there's going to be a change or a jump for you to sell your XLF and not hold it overnight, and to purchase a QQQ put or call. So let's look at the 5th here, and that was the last time I saw a jump like that. All right, 15-minute. We're going to look at the 5th. Now you can see here there was a jump. So what had happened was the control line, as I told you, went below 20. You saw a setup like this. You had the two lines start splaying out, and this right here says there's going to be a jump. Whenever you see it like this, memorize right here. Whenever you see this kind of setup, there's going to be a jump. Now we're going to verify this on the 3-minute. So if you see it on one, you have to see it on another for it to be a solid signal that you want to trade. So right here, it looks like you're going to be trading, you're going to sell your XLF or whatever you were in, and you're going to go for a call here. So let's double check on the 3 minutes. Let's see what day was that. That was the 5th. All right, so. Okay, same kind of setup. So it was now this is still like an hour before close right in here. It's just a little bit of a longer chart because it's 3 minutes instead of 15-minute intervals. You see it went below the 20 line, because right here's the 20 line. You bring it all the way across. Went below the 20 line, and you saw both of these start to splay open. So yes, that's a good signal. So I would have bought a call about 5-10 minutes before close. Now, what option do you want to buy for QQQ for calls? So here, in this kind of situation, when you have an overnight jump that you're trying to trade, you want the most recent stock price option strike price, which is the week that you're in, the most current one. So in this case, the 15th. All right, you can see here it's the 9th, so you want the 15th because you're looking for maximum gainage from an overnight gap, right? And the options that are going to jump the most are the ones that are a quicker expiration. Okay, they're going to be the most reactive. So what do you do here? Now, remember, QQQ is expensive. Okay, you can't be, you know, if you don't have much money, you can't be trading at the money like you could XLF at 80 cents because these are like $3-4 at the money. So we think this is going to jump. So what we do is we count 10 strike prices. We go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you can go 9 or 10 strike prices, even 8. You know, and then right here you're dealing with 27 cents, 36 cents, 50 cents. And since the option, you know, and you could see that this is all active in here because the option strike is so, you know, close. You know, the further out of an option strike you go, the less movement and activity there's going to be, and all this won't be being traded. But this is heavily traded. So if you still like trading, you know, 30, 40, 50, 60, 70 cents, you want to go about 8 to 10 strike prices out and purchase one of these. And you hold it overnight, and when there's a move, boom, it jumps 30 to 60 to 70%, and immediately, you know, like 15 minutes after open, when that happens, 20 minutes after open, you sell it, take your money, and then you go back to XLF and start dealing with it from there. Okay? So basically you're trading XLF, okay, at the money, like not this week but the following week strike price, and every day, 20 minutes before close, you check the QQQ, you check the 30-minute, I'm sorry, you check the 15-minute, and you check the 3-minute. If they both line up like this, and then like this, see, that doesn't like that I'm using two different windows, or like this, you're good. The DMI control line has to be below 20 on both. Both of them have to say go. If only one does, you can't do it. Okay? Then that's not a solid signal. And then you may want to decide to hold XLF overnight, and you know you might get something like this naturally, like boom, you know, because that means it's still a good trend going the way you want it to go, and it'll just, you know, fall the next couple days, and then you know, go from there. Now, a few notes: you don't want to use XLF for looking overnights. You want to do the cubes, 3 minutes and 15 minutes. Okay, so basically, guys, that's how I trade. All right, I day trade the XLF. I use the 30-minute window, and do the options as I said, you know, at that strike price and at the money, and then every day before close, about 20 minutes before close, I'd start looking at the QQQ 15-minute, QQQ 3-minute, and if they both match, if they both say jump to the upside or the downside by the chart patterns I showed you before, then you sell your XLF and you purchase that QQQ call option 9 or 10 strikes out of the money, like that, and then you hold it overnight, and then the next morning, within the first half hour of trading, that's when you sell that call or put option, because that is an overnight play only. Now, a few particulars: when you are trading XLF, you probably won't be able to do it 5 days a week, especially if you're making 2 trades a day. Okay, you know, I would rather you not trade every single day in and out. You're probably going to get in on a Monday and then exit on a Tuesday. See what I'm saying? Because of this drop, and then get in here when it's above the red line, and it drops again the next day. So that's how you're going to be playing it. Now, I gave you the keys to a Ferrari, but you probably won't know how to drive the Ferrari right away. So you're going to, you know, don't wrap it around a tree. Practice this on paper and see how it suits you. And any questions, get a hold of me on my Facebook page. And guys, I hope this helped, and good luck.